Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for 𝗧𝗴𝗃. Today is Monday. We are finally in October 4th. My birthday is less than about 3 weeks away. This is going to be a big month. And remember, October is the most volatile month. Now, today is Monday, and today we're going to talk about this week's outlook, the biggest threats and the biggest opportunities in the market. So pay attention, take some notes. I'm going to try to set you up for the week ahead, and between you and I, I'm going to give you a couple of hot stocks, but we won't talk about that to anyone. It'll be just our little secret, okay? So starting off, the market's going to open up in an hour and 59 minutes to be exact. The Nasdaq is down quite a bit. The Dow Jones is down 121. Keep in mind, though, if the markets were non-volatile the last few days, I would make a lot out of this. But considering the Dow Jones has been moving 500 points, 400 points last week, and considering the fact that October is the most volatile month of the year, a little extra volatility is not surprising. So let's see how the market does over the session. As far as news this week, last week was all about interest rates, inflation, and the Fed. This week is all about supply chain. Supply chain, how it's impacting our economy, whether it's pervasive, whether it's going to continue, how bad is it? For example, international trading goods and services. That'll give us a really good understanding of where we stand with our supply chain. The PMI composite, the ISM manufacturing services, wholesale inventories. We'll have a really, really good idea of where we stand in terms of that bottleneck problem and the supply chain bottleneck issue. That's the overriding theme for this week, and we've got employment and jobless claims. Now, I'm going to tell you guys something. The numbers have been going a little bit higher, and I mean a little bit higher. Everybody's making a big deal out of it. Honestly, the 4-week moving average is 340. Last week, 362. The 4-week moving average is 340. We've been all the way down to the low 300s. If we go up a hiccup a little bit, 20, 30, 40,000, it's not that big of a deal. So anything within the 350, 348, actually, that's a pretty good consensus. I'm okay with that. It hasn't been all that bad. So let's keep our eye on the jobless claims, and I'll talk about employment situation as we get further on in the week. But I'll tell you this, I'm not as much interested. There's two numbers. There's a few numbers here. There's the unemployment rate, there's the payroll number, and then there's the unemployment rate. I'm actually looking more on the unemployment rate than the non-farm payroll, because I don't know if this takes account. There's a lot of hanky-panky going on there with the type of employers and that. I just don't trust this number as much as I trust the unemployment number. So keep your eye on the unemployment number. That will be telling. Now, in terms of the bond market, in terms of the overall market, let's talk about all the things that are on the table this week. Hong Kong, China. China's not going anywhere, folks. Benchmark is down more than 2%, which is why the Nasdaq and the S&P and the Dow is down. After troubled property developer 𝗧𝗴𝗀, they were suspended for trading. We knew it was a matter of time. Most of that is priced or baked into the market. 𝗧𝗴𝗀 is struggling to make payments on more than $300 billion of debt as it ensures cash crunch brought by the tightening of Chinese government restrictions on debt leveraging financials. That's an ongoing problem, and that's going to be plaguing this market for quite some time. Crude oil prices fell ahead of a meeting of major oil producers. That's another major factor this week we're going to be looking at, natural gas and crude oil. There was no sign that a spill from a pipeline off the California coast was affecting oil prices. The environmental impact was likely to be much worse than any effect on overall oil supply. That's unfortunate. The amount leaked was about 3,000 barrels, while the U.S. produces more than 18 million barrels a day. Yeah, so that's not here nor there. But oil prices have been hovering around a 3-year high, and natural gas too, multi-year high, as Hurricane Ida slammed into critical ports and served as the primary support for Gulf of Mexico's deep water offshore oil and gas industry. That's a problem. And in other news, I wasn't going to let you off that easy. Of course, I'm going to give you an update on the Fed. The Federal Reserve is close, but not yet, to letting off the accelerator on its support for the market. Economic data has been mixed following the upturn in COVID infections. Corporate tax rates may be set to rise, and political turmoil over the U.S. debt ceiling and funding of President Biden infrastructure initiative continues. That's not going away. That's going to continue with the drama. Put the call ratio. we are a little bit on the upside, and with the market down, the fact is, not every session, but last week, all last week and the week before, we've been hovering oversold territory, oversold, which means the market is pretty close to pulling back. Also, if you look at the VIX level, VIX it went up to 25, but it's been hovering around 20, and I think we're going to peak out and come back down. The biggest factor, look at the Nasdaq 100, folks. This is the momentum levels. Yes, I've been talking about them ever since May of 2020. We are finally at the bottom. Notice, now here's why I'm not too scared right now. We can go a little bit lower, but look at where we're at. In the last 20 years, we went below the current level 1, 2, 3, 4, 5, 6 times. It looks like we're right at the bottom of the momentum levels. And if you look at, let me just show you the QQQ technically. Finally, momentum levels and technicals are on the same page. It doesn't look like we have much more downside. It looks like we're coming up. And the truth is, even if we drop to the 200-day moving average, most stocks are already trading below the 50-day moving average. The number of stocks above the 200-day moving average is fairly healthy, so I'm not too concerned. One of the assets I think this week we're going to see a rally, aside from stocks. I think we're going to see a rally on stocks. But I also think we're going to see a rally on the bond market. So I'm expecting higher bond market prices, which means lower yield on treasuries, and I'm expecting upside on stocks. Now, as far as the stock market, the number one sector continues to be consumer discretionary, which again is the most defensive sector right now. And as you can see here, we're very, very close to all-time highs, and we're just hovering around this channel. And I think we're going to continue hovering around this channel. And if you notice, we're on the low end of the channel, so I think we're going to go back up. Now, we may stay choppy, but I don't think we're going to go down that much. We may have a lot of volatility and a lot of trading range, but as far as declining, let me just show you something here. We're already fairly close to the 200-day. The lows have been getting higher, and unless we break this and go to the 200-day, which I think will be the bottom, so I think one way or the other, we're either going to go up from here, break these two level highs, or we're going to break this down and bottom out over here. Based on the put to call ratio, it already looks, let me show you momentum levels on the Dow. It looks like we're either there or very, very close, because look. Here's the Dow Composite, 27% of stocks. Let's look long term. See that? I mean, we could go down here, but again, how many times did we do that over the last 1 time, 2 times, 3 times, 4 times, 5 times, 6 times, 7, 8, 9 times in the last 15 years? So we could, but it just doesn't feel like it quite yet. And October's just getting started. So consumer discretionary remains the stock. The asset you want to pay attention to is definitely the bond market and momentum levels. And I'll be updating you as the week goes on. But before I let you go, I've got three hot stocks pulling back to the 50-day line that you need to pay attention to. First one, on semiconductors. Semiconductors are actually pretty hot right now. Look at the semiconductor sector. It's not looking that bad. It's looking pretty good, actually. It looks like we bottomed out. It doesn't look like we're going to go below this level. So I like the semiconductors right now. So I like on semiconductors. It's actually one of my favorite semiconductor stocks. So I do like the stock. And again, look at RSI. It's at 39 right now. Next stock. I think the stock will bounce out around here, 45, and hit the 50-52 level over the next maybe 6 to 8 weeks if we move higher. Next one, Zim Integrated Shipping Services. Remember, supply chain issues. Shipping services are going to be busy over the holiday season. We're right below the 50-day line. I would wait till we're above the 50-day line, maybe above the 51 level, and I think we're going to hit the 62, 65 level over the next 2 months. So Zim on, and last one, DoorDash. People want their food. Winters are coming. People spend less time outdoors, especially in the winter months. We're going to see more business from these services, especially with COVID coming a little, getting a little lower. The rate of infections is slowing down. Rate of deaths is slowing down. So I would wait for this to bottom out. I think we're close, and then I would buy it around the 204, 205, 200, somewhere between 200 and 210. And I would ride it to about the 230, 240 level over the next couple of months. I don't think this is going to be a 12-week play for any of these. I think these are going to be 6 to 8 week plays if the market behaves itself, maybe even less. And I hope you guys got a good week outlook and you saw our biggest opportunities. It's going to be these stocks and bond market to the upside and consumer discretionary. And I think stocks are going to rally based on momentum levels. Now, our biggest threats remain interest rates and China and the supply chain issues. And I'll be updating you. Whoops. I'm getting nuts here, hitting my mic and everything. And I'll update you as the week continues on those factors. Now, before I let you go, I've got something really important that I want you to pay very close attention to. Tom Busby, you guys know T-Buzz. Tom Busby is widely considered one of the world's top traders and researchers in this industry. After his 35 years of trading professionally, he's figured out a brilliant way to use a little-known market secret. Between us, it's a little-known market secret. And it's all thanks to a loophole in the markets that can create moonshot trades on 10 to 20 cent option contracts. Tom finds these loopholes on the secondary market. That's right. You've got to check this out for yourself. Tom is hot right now. Some people have never heard about these secondary markets. It's a completely overlooked part of the options market that most traders and investors don't understand or even know exists. And thanks to Tom, everyone can now use this loophole to access amazing opportunities and moonshot trades. All you've got to do is click on the link below and see how you can get access to these moonshot trades and learn more about this little known secret. It's a little secret just between us. Folks, follow the link below. Tom Busby is red hot right now. October, volatility. Swing traders and volatility, best friends. Oversold put to call ratio, momentum levels. The markets are ready to get going again. Click on the link below and learn how you can access these moonshot trades and learn more about Tom Busby and his little known secret. And make sure to like this video, subscribe to this channel. Hey, I want you guys to stay ahead of the market by being in tune with what's going on. So subscribe to these videos and you'll be notified as soon as a new one pops out. Doesn't that sound good? And it doesn't cost you anything. And I want emails. I want feedback from you guys. Bye, guys. Have a great day. Have a great October. And stay out of trouble. Lower your position size. It's going to get hairy out there. Bye.